in regards to a trade that we called out on the floor and trading BP. We've been in this trade for quite a few months now, actually, and it's up around 12%, assuming you're risking 1% per trade. So just a reward to risk of 12 to 1. And the interesting question is, what do you do with the trade? Do we take the money off? Should we close it? Should we bank our money? What do we do? And for a lot of retail traders, this is definitely a good problem to have, being heavily up on a trade or in profit and deciding when you should cash that out. Being in that position does show a remarkable journey from when you first start trading, when typically it's the other way around. Your trade is going against you and you're saying to yourself, when should I get out? Should I just get out now, or should I get out at my stop loss? And before I talk about that aspect of it, just want to talk through the trade and the reasons why we got into the trade, because the reasons why you get into the trade, depending on the factors you use, purely technical analysis or a combination of fundamentals and sentiment, will depend on how you exit the trade and where you exit the trade. So let's have a look at the chart. So we can see we have a chart of BP stock, and this is the BP listed on the London Stock Exchange, not the ADR on the New York Stock Exchange. And we're looking at the weekly chart here, and you can see overall we were in a consolidation. Now, what's great about a consolidation is that you can trade in between the ranges, and you can also trade the breakout from the ranges. Now, we took a trade here on the long side, and this is not the trade that Jim is talking about, but we did take a trade here to the long side, and we were expecting it to go up to this level of resistance. However, when we take it down to the daily chart, what you'll see is that the market never went to that level of resistance, and it actually broke through the channel here. And this is actually the trade Jim was talking about. This is the trade that we took on the floor. Of course, the trade that we took here was actually on this high-low ABC retracement, 50% fib off the overall move higher. The trade we took here, obviously that got stopped out at a profit with a trading stop loss. However, the trade we're talking about here is the shorts. Now, at some point, it's going to break out through the resistance or the support level. Now, we're not necessarily going to know when that will be until it actually happens. However, the market was moving in this range higher. It did break out this range. And what else was happening around this period of time? Well, the stock market volume as a whole was starting to peter off. The global equity view was really quite negative at the time, and we've had a massive slump in commodities and obviously oil prices as well. So that's put a big strain on oil and gas producers and any type of oil, gas, commodity-based manufacturing or production company such as BP. So we had fundamental reasons to suggest that, okay, overall BP and the overall market has the potential to move lower. And we also had a tech support breakout. And the actual trade was this. It was a breakout from this channel here and the retest of the channel. Now, the retest of this channel is quite interesting because we have the retest of the 50 moving average, and the 50 has just crossed below the 200 moving average, otherwise known as a death cross, which is a bearish sign. I'm just going to zoom in a little bit more and just take it back slightly. What you'll also notice here on this price action setup as well is that we have a high test bar or a pin bar reversal, but also during this whole move higher, or this little rally higher, what you'll see is on the volume that the buyer's volume was getting weaker and weaker, telling us that actually people buying in this retracement is very, very weak. And we had more sellers overall in this move higher. So we've got fundamental reasons, we've got overall sentiment, we've got the broader market direction in our favor, and we've got specific factors related to the stock and its sector, as well as the technical confluence that I've just talked about. So it was a very low risk trade to trade it to the bottom of the range here. So remember the lower consolidation support level here. If you just traded it with standard entry on the break of the low and stop loss at the high, then just trading it to that lower support would be about an 8.5 to 1 reward to risk trade. Now, That's if you're risking 1%, some of you may risk 2%, some of you may risk lower. Depends on how you decide, or the vehicle you decide to trade this with. Is it a CFD? Is it the actual, is it an option, such as buying puts or something like that? It really depends on how you position this. It may be a hedge for your portfolio, because a lot of people may own BP shares because of their high dividend payments. So again, multiple things to do here, and how you profit from this or how you use this in your investment portfolio obviously depends on your own individual circumstances. However, most of our members already know that we like to employ trailing stop losses in these kind of market conditions. And the interesting thing is, if you actually employed a trading stop loss to every seller bar, or even just in this case every single bar, then you would actually still be in the trade. Now, of course, we didn't expect it just to go down every single week. However, it did do so, and we're still in the trade, and it would be up around a 12-1 now. So what do you do in this instance? When do you take out the trade? Well, a lot of people took out at least some of their profits at this level here. It would be ignorant to ignore this support level trading at around 360, 365, because that is the level of support. Of course, we know at some point it will break through, but we don't necessarily know that's going to break through until it actually happens. There were indications that it would break through this lower support level, because as you can see here, the market came from the resistance, came to the support, tried to rally higher, failed to reach the resistance, and came all the way back down to the support. That is an indication that the probability is it will break lower. But we are seeing the trade employing a trading stop loss, and we've already taken off some of the trade here. Now, of course, the ultimate target would be to this level here, and that would be your final target. So this is your first target, and this is your second target, where really we'll be out of the trade and potentially looking for a long position here as well, depending on what else is setting up with the overall broader market and the fundamental factors affecting oil prices and commodities. Now, for a lot of people, even to get it to this point would be great, and this is what traders go through on a daily or weekly basis, is the fact that you may have taken out your whole position here and be kicking yourself because you could have let it run a little bit longer. And the reality is, you don't know what's going to happen, and you have to play the random probability game. And all you can do is put the edge in your favor and trade little and often. Even getting it up to this point here, an 8.5-1 reward to risk, you've given yourself a buffer in the fact that if your next 8 trades were losing trades, well, then you're still at a break-even level. So again, it is a good problem to have, but more often than not, it's not anything to do with the technical chart or the stock. It's more to do with the emotions of the actual trader or investor in the position, and their attitude on how much money they want to make or how much money they want to protect. Again, if you've just taken 2 losing trades, that may affect where you take your profits on this trade as well. And being able to separate your trades is very, very important. But the key thing is first of all, get into the right trade. That is really the struggle for most beginner traders, having the discipline to get into the right trade over a consistent period of time. Where you get out of the trade, well, that is definitely a lifelong journey that it can always be improved, because everything's always easier with hindsight. But if you're getting into the right trades and you're making a positive reward to risk on those trades, then even if you're right 50% of the time, or only right 50% of the time, then you'll be making money, which is the name of the game. So I just wanted to put this video together just in answer to a couple of the members, some of the questions they had as they were still in this trade. I hope you found this video to be of use, and I hope to see you on the next one.